on the correct track if we sold Tesla earlier and then bought it back. A lot of people did that. However, one person, Carter Worth, managed to foresee these precise times. If you are familiar with him, you should definitely follow him. Before we continue, make sure you like and sign up for more jaw-dropping Tesla stock news. At first, he declared with confidence that the stock was worth about $240. The timing seemed perfect, but hold on tight, because he quickly changed course and advised purchasing the stock at about $110. Talk about an incredible ride. We were all intrigued by his market predictions, but just when we thought he had everything figured out, things took a turn for the worse. The stock fell sharply, seeming in reaction to the previous quarter's exuberant rise. It was like a reciprocal, equal, and opposite action. And after such setbacks, we found ourselves questioning why we had invested in Tesla in the first place. It felt like a struggle for the stock to recover, trapping investors' funds and leaving them wondering if they would ever climb higher. Now, you may be wondering, what's the point of buying into Tesla after such a setback? It's a valid question, and one that we have all eagerly anticipated an answer to. Trust me, you don't want to miss this. People have been buying the stock between $180 and $210 for the past 2 months, only to see it drop to a daunting $165. Joined the well-known chart in 2019, Master Carter Worth made a startling revelation when he said that Tesla shares, despite the recent decline, were set to surge. According to him, the stock had reached a historically low point that had not been seen since his IPO. So the situation appeared to be so dire that it might actually be a wise risk. But here's the kicker. Back in 2019, in just 1 week, Carter Worth correctly predicted that Tesla's stock would bottom out at just $13 per share. It seems that he had a knack for timing, because a week later, he doubled down on his position and bought even more. Guess what happened? Tesla stock shot up, soaring to a whopping 15% increase as investors flocked back to the company. Let's fast forward to the present, and Carter Worth notes that the opportunity to invest in Tesla hasn't ended yet, despite some short-term gains. In fact, he asserts that those who succumb to short-term thinking may eventually regret their choice when the Tesla reach new heights. While some may contend that there are no longer any possibilities and that it is too late to jump on the Tesla bandwagon, the truth is that even if the stock has seen fluctuations, it has increased by more than 10 times since 2019. It has risen tenfold from its modest origins. So instead of succumbing to the illusion that the opportunity is slipped, finding a midway ground is advised by a way work. Keep some of the gains gained thus far and let the remaining portion benefit from potential future growth. Maybe there are people that this surreal trip through the highs and lows of Tesla stock illustrates the erratic character of the market. While short-term profits may be alluring, the long-term view is what really counts. Take a closer look at a prime example of why actively managed funds frequently underperform the market by cutting their winners. Quickly, don't be one of those people who look back in 2030 and wonder what could have been. Instead, embrace the excitement, risks, and potential rewards that investing in Tesla can bring. However, this approach denies you the opportunity to experience compounded returns, leading to significantly lower gains than you could have achieved. In her long-standing obsession with Tesla shares, Cathie Wood has made it her favorite place to invest her money. ARK Invest produced an incredible 4.44 return. Although Cathie Wood has made intelligent comments about Tesla, if I were to show the number to my Taiwanese Canadian wife, she would think it was cursed in Chinese. The number 4 sounds like the word die, and seeing quadruple death in the performance figure can be pretty foreboding. The stock increased by 741%, whereas ARK Investment had losses in the same time frame. This result can be attributed to prematurely exiting profitable investments in the stock market. Anything is possible, Carter continued, but anything is not credible when the price targets are too high. When I publish notes for hedge fund managers, pension plans, or families, they frequently doubt my optimism if I say a stock could triple from its current price. For this reason, I aim for setting price targets that are both realistic and imaginative, but not beyond reach Dan may have imagined $60. But it could just be an anomaly. This scenario demonstrates why it's important to avoid putting too much reliance on hedge fund managers and analysts when it comes to price targets. These individuals frequently base their decisions on adjustments to appease their audience rather than on objective reality. If you have a higher price target in mind, they can accommodate you. If you would prefer to see a lower price, they can adjust accordingly. Unfortunately, this approach prioritizes pleasing people over outperforming the market. To be clear, not all hedge fund managers and analysts operate in this way, but as Dan Nathan acknowledges, there are many who do. Although there's nothing fundamentally wrong with this approach, it isn't based in truth or reality. Instead, it caters to people's imagination. Setting modest expectations is easy to achieve if you haven't seen the stock double or even increase tenfold in a short period of time. Fossil dive is a long-standing mystery that has never been solved, leading many people to assume it's an impossible task. But, my friends, such thinking will only limit our potential since groundbreaking ideas frequently come from beating the odds. It doesn't follow that electric vehicle ventures are unattainable. With that in mind, let's get right to the point when talking about Tesla's advancements. It's critical to determine whether we're focusing only on the stock price or if we're also looking more closely at the margins and cost-cutting measures. Additionally, it's important to determine whether we're fixated on the technical aspects of the stock trading. Well, friends, this recent sell-off is the exact opposite of what happened in the previous 2 years. We have a stock that nobody seems to believe in, but analysts keep raising their price targets, and guess what? The stock keeps flying higher and higher. However, let's pause to consider the great revelation, if you will, the highest multiples. My dear managers are frequently associated with businesses before they start turning a profit. In the case of biotech and technology stocks, you see it's all about aspirations, dreams, and the boundless potential they hold. However, when you start manufacturing cars, you start making real margins and tangible profits. To where it's interesting, if we dare to take it into the real world, there's a chance, possibly even a significant possibility, that profits could suffer temporarily. James alone won't cut it anymore. It's time to face. Tesla may decide to strategically lower pricing going forward, which would have an impact on short-term profits. My friends with lesser incomes may be surprised to hear that the stock multiple has skyrocketed. It may seem counterintuitive, but there is a method to this madness. Let's take a moment to change our perspective. Investigate the world of dreams. Tesla, my dear investor, still has a lot of ambitions to share. The Cybertruck is one that I firmly believe will materialize. It is the pinnacle of futuristic driving, and although some investors may have lost faith in fully autonomous capabilities, that is exactly what works in our favor. You see, there is no assigned valuation for that aspect of Tesla's business, which effectively lowers the stock price and presents an opportunity to buy more shares at a discount. But wait, Tesla's energy storage business has enormous potential. Speaking of dreams come true, Elon Musk himself stated on the most recent earnings call that there may be a multi-billion-dollar opportunity. Granted, it may be a long shot, but let's not rule it out completely. Dojo's valuation alone may eventually surpass Tesla's current value. Additionally, the next generation vehicle promises affordability and unrivaled values. Friends, this is not a pipe dream. It is inevitable. And there you have it, ladies and gentlemen. The ride through the highs and lows of Tesla stock has been nothing short of an exhilarating one. From Carter Worth audacious predictions to the price fluctuations that have left us witnessing the unpredictability of the market, there is a glimmer of hope amid the uncertainty. Thank you for joining us on this exciting journey. Despite recent losses, Master sees potential for Tesla to move into high gear. He believes that the stock's historical low position might be a turning point for a tremendous increase. Remember to like and subscribe to our feed for more mind-blowing news on Tesla stocks. As usual, good investing.